Ladies and gentlemen, look at that. We're actually back to on time, but we weren't expecting to be back on time at this point. But obviously, we've made it to the afternoon session. So thank you everybody. Today has been phenomenal insight so far, and so far it's been given high regard for the first panel session that was there, and I expect the same from the upcoming panel session. So just give you a bit of a highlight what's coming up next. So obviously going to be having the panel session, and this is really focused on specific application of blockchain. And we really want to do this because we want to highlight to investors how industries and how different verticals are in the process of being potentially disrupted by blockchain as a technology. And we want you guys to understand this from their perspective, how they're seeing it, and then also engage with Darren on more sort of detailed questions. Then following that, obviously there'll be 4 presentations. And then I spoke to Henrik from Apollo Capital out the side, and he's made the claim to me that we're saving the best for last, aka his presentation. And what Henrik's doing is going to be going through from an investor perspective how they assess potential crypto opportunities. So, for the investors here that have been here all day today, I'm sure that's one of the key areas for you is how do you assess these opportunities? What are the investors that are in this segment actually looking for? How are they making money even when the price is coming down 70%? That's the kind of thing they're looking for. So without further, I'm going to introduce Alex to intro the next panel session. Thank you.
Thank you, Steve. And now just a quick bit of housekeeping to let you know that Forever Has Fallen will be the next presentation after the panel discussion. And now to the panel discussion, I would like to introduce, just a mind blank there, Darren Younger from Lakeba, who will be moderating a panel featuring Brett Sampson, Justin Dombrowski, Poposka, and Mark Toohey. Thank you very much.
Hello. Awesome. Okay. So to start off with this panel session, we're going to do something a little bit different around talking about blockchain in industry. So one of the things I just want to ask is, first of all, in the room, how many people have heard of blockchain? Right. Okay. So when I ask that question, it's a little bit different in corporate world because if I ask someone, what is it that you know about blockchain? Even at C-level, there's a lot of CIOs, there's a lot of chief digital officers, the people that should know about what blockchain is, and they don't really understand it, and they kind of get a little bit skeptical around what it is and how to use it. We all know that, everybody in this room would start to appreciate and understand what differences and what changes that blockchain will make in the world. And the enterprise space is a really interesting space. So I'm the Chief Growth Officer of Lakeba, and at Lakeba we work with a lot of enterprise clients around building different innovation solutions, and there's been more and more recently around blockchain. And so helping those guys understand what is blockchain and how does that all work. And the industry application of it is very, very different to just coming up with an idea and we're going to tokenize and we're going to take that to market. There's a lot of different challenges when it comes to the enterprise space, and also, when you talk about different industry verticals, they'll have different variations on regulation or different variations on a whole range of things. So it's going to be a really interesting conversation today, and so I'm going to start off with just first of all an introduction from each of the panelists, and what is specific about their industry that is blockchain is so appealing for.
I'm Brett Sampson. The product's called Blast and the company's called GT Systems. To answer the specific question, the really great application for us for blockchain is as a way of incentivizing our customers to share both their disk resources and their bandwidth resources and movies. We're the world's first legal peer-to-peer movie sharing service, approved by one of the largest studios in Hollywood. And it's about giving them an incentive to do that and a mechanism of reward. But we're a little different from a lot of people in that we're more like a frequent flyer, frequent sharer type of a token, for want of a better word. So that's kind of that's the killer app for us. We're not actually using it on the peer-to-peer distribution bit, but particularly for rewarding people for doing stuff.
Hey, I'm Justin Dombrowski. I'm CEO of a small business called Soho Capital. We basically have two different arms of the business. One of them actually works with early stage companies and even more mature ones that are considering things like token sales to grow out their business. A substantial portion of that element of the business is working with businesses to help them understand whether they actually have a viable use case, testing it with the market, evaluating what kind of technology they might use. But the second half of the business is really around orienting investors. So actually helping investors perform due diligence around potential investment opportunities, whether they're ours or somebody else's, doesn't really matter, to really get a sense around whether the use cases actually stand up or whether they're just simple pump and dump schemes and somebody's looking for cash. Before that, just FYI, I used to help run PwC's crypto consulting practice. So out here throughout Southeast Asia, I basically had a job for 2 years running around, flying around, talking to banks and things like that, running projects for them just around this space. So I've done more use cases than I can name, but probably since 2012 when I got into the space, I've probably done like 20, 25, and so I've got lots of battle scars over how this space works and really won't work. So that's my background.
I'll use this one. Okay. Hi, my name is Emma. I'm one of the co-founder and CEOs of Brontech. So what we do at Brontech, we use the blockchain for basically two things. I think blockchain is or any kind of distributed ledger technology is a very good way of, as we say, establishing trust. Let me not go into the definition of trust, but in a nutshell, what by establishing trust we mean we make people that don't trust each other or don't want to trust to a central authority, to use the ledger to establish some kind of trustless communication. So in Brontech, we're developing a decentralized data marketplace. We have personal data wallets where people can extract their personal information, and then we market those information as data products, and we sell that data products to corporates. When people share this information, they're basically getting money or a reward for it. So in a nutshell, we are disrupting this typical data brokerage model. We are making it a little bit more secure and way more ethical. So we know what's happening currently with Facebook and with the data breach of Cambridge Analytica. We know what happened last year with Equifax, where millions of personal data files were leaked. So basically, we want to solve that. We enable people to store their personal information in a storage of choice, so it doesn't have to be on our servers at all. But we've created a protocol where for every bit of information, we create a cryptographic proof, and then we store that on a blockchain. So if a person wants to exchange this data in a peer-to-peer manner, so let's say I want to share my information with a particular bank, let's say Westpac, I can do so, and also Westpac can trust that I'm telling the truth. We use the blockchain for storing proofs of those attributes, and we also use the blockchain to, as typical with other projects, to manage our native digital currency. So that's about me.
Thank you. My background is as a commercial lawyer. I've been involved with Bitcoin probably around 6 years now, from the time when it was about 20 people in a coffee shop, and it was more dreamlike than now. It's a very big reality. So what I do now is blockchain, and I'm solving one of the world's biggest problems. It's a problem that affects every person in this room, but most of you wouldn't know how bad it is, and that is the problem of fake products. So fake medicine, fake food, you name it, it can be faked. It gets as extreme and as ridiculous as fake fire extinguishers exist, which of course you don't know they're fake until it's way too late. Fake medicine, Interpol says it kills 1 million people a year. The head of World Customs Agencies worldwide says there's more fake medicine for sale in the world now than genuine medicine. It gets as ridiculous as fake chemotherapy, which is what got me started on this, because I'm a cancer survivor, and the fact that people got fake chemo in US hospitals is just completely unacceptable to me. So what we do is We work with some of the world's largest supply chain companies. We put a unique identifier on every single item, every bottle, every packet, every can. That's one layer of protection. The next layer is we track it all the way through the supply chain. So we're working with one of the world's largest ports companies. They have 77 container terminals around the world. One of the world's largest trucking companies, DB Schenker, I think they're the biggest in Europe. And in our trial where we sent a shipment of wine, Australian wine to China, Hamburg Sud joined in that with us, so it went through from Adelaide to Melbourne through a DP World port onto a Hamburg Sud ship, and of course DB Schenker did the trucking for it. If I can wrap up this whole day though, at the end of the day you've got to make a choice between whether you are an investor or whether you're a speculator. Now if you came here today to find out about speculation, good. If you want to invest in this technology, then hopefully there's some good solid companies that will, that old thing of return on investment and revenue, they're the things to be looking for when you talk about investment.
Great, thanks guys. Justin, I'm going to go to you next. So you worked in a lot of the, in the finance world and you look at a lot of blockchain projects. What are the things that really identify, a good use case for blockchain?
I mean, so right now, if you were to take a look at the top businesses that are trying to deploy something interesting in the space, right? So we're talking maybe digital asset, maybe we're talking Symbiont, maybe we're talking R3, right? And these are the ones that, if you pay any attention to the space at all, these are the ones that have been around for a few years. They've had a few different iterations. They have partnerships, like in R3's case, with 75 odd financial institutions and insurance companies and things like that. And you ask, like, okay, what is the level of interest actually in a business like that? Because that sounds like it's an awful lot of hype. And then you realize that, okay, each of these businesses got invested in by an FI to the tune of a couple of mil. So the pocket lint inside of JP Morgan's pockets, right? So next to nothing, right? And then you find out also things like, in order for this thing to actually mature to the status that it could actually get utilized, it's going to be like a 10 to 15 year process, and everybody kind of sort of knows that. So to get to your question, what is it going to take? I think when most FIs seriously take a look at the type of options that are on the table, they see long durée and let's wait and see. Because if you know anything about banking infrastructure or the types of processes that are there are hundreds and hundreds and hundreds of layers of different components to a software stack that would need to get changed in some fundamental way in order for a good use case to be made. Now, where that's not generally the case is if the offering is something that's entirely in parallel to or independent from operations they'd already have, right? So an example that I've been doing some work with lately is a company called, it's an offshoot from the old Factum Corporation, if you guys know about these guys. So these guys have a pretty interesting data model where they help businesses produce auditable records of stuff. In their case, they're focusing on mortgages. And if you know anything about the mortgage world, auditability of all the data that exists with regard to a mortgage is pretty horrific. So if anybody can provide a new solution to that, that's advantageous. So what I would say is that's it. It needs to be something usually in parallel to, complementary to, but not going to fundamentally require some kind of an overhaul internally in order for it to be attractive. Yeah, another obvious counterexample of that is the cryptocurrency stuff. Again, because it's a new asset and people can make money on it. So, and banks always look for new stuff that they can buy that they can make cash on. So there's increased attraction there. So long-winded answer, but yeah.
And Emma, you talked a little bit about identity and some of the challenges in the last couple of years around, identity and data being, exposed, let's call it. What's different about blockchain and how does blockchain help in that identity space?
Okay, so in terms of, blockchain can play part of the solution. It's not a full solution to identity. So I don't want to sound like, oh yeah, so we now use blockchain and that is it. We had to develop our own identity protocol and use blockchain for part of it and use blockchain for things that were not possible before. And I want to stress that. So I really don't like businesses or projects that are using blockchain for things that were possible before. And now we're just using blockchain because, you know, it's here, it's new, it's interesting, it's sexy, everyone will invest in it. So investing, so to go back to your answer, if you look at blockchain and blockchain product, every blockchain project or every blockchain infrastructure, if you need an address and if you need an identifiable account, if you centralize your account, how your identity is managed, then in effect you're getting a centralized system. And there is no decentralized identity out there. It's either segregated and siloed, or it's very centralized, and you can only use that identity on that platform. That's the first thing. The second thing, to create an identity system, you need to own your data. And people are coming to a point where they realize, oh my God, we don't really own our data. It's either in Facebook or in Twitter or in LinkedIn, or our government has the right to issue our passports, or my bank is holding my information. So there is this year is happening a huge legislation change. First in Europe, it's being enforced on 25th of May 2018, so that's in a month and a half. It's called GDPR. And then in Australia, and that's Consumer Data Protection Right. And now the governments are acting as the biggest cyberbank, and what they're saying is, no, the data that you created as an individual belongs back to you. So companies have to create API, a way that you can extract the data in whatever place you want, or you want to share it with whomever you want. So that's actually what we utilized. We created this protocol where you can extract the data from different organizations, governments or banks, but we didn't want to repeat the same mistake. We didn't want to centralize it. We didn't want to put the data in one server and, of course, be liable, but also make it a very insecure, like basically repeating what was happening all along. So we enabled users to create their data repositories and then just use blockchain for the exchange of the proofs for exchange of the proofs when the person wants to exchange the data with someone else. So I will tell you a typical use case scenario that we've done with with one of the organizations. Let's say you want to get an insurance quote. To get an insurance quote or a loan, someone has to assess the risk, what kind of candidate you are. To assess your risk, either you have to fill in a survey, and they're never 100% sure if you're telling the truth or not, or they will have to access your information from different sources to figure out your risk level. If you don't control your data, you cannot do this. You cannot do that exchange, and we can facilitate that. So now you can get instant quotes for your loan or your insurance. You can your identity can be verified, but also your transactional and behavioral data can be verified, and companies can give you even better offer because they can assess your risk even better. So that facilitation of identity verification, and on top of that, your transactional and behavioral data was not possible without distributed ledgers, where there is no single place in charge to facilitate this exchange.
Okay, great. So I guess one of the challenges with using blockchain in industry is actually trying to get the industry players involved and getting them to be a part of it. Rhett, how do you get people from Hollywood to buy into blockchain?
Very slowly. We started 10 years ago with a technology called Manufacture on Demand, burning CDs and DVDs in retail stores. We realized very quickly that to make it work, we needed to get movies on, so we took to the studios, and we've been talking to them for 10 years. And the milestones, there's a couple of highlight milestones. One was an in-store of the MOD technology in Big W in Winston Hills. I don't know if Charlie's still in the room. There he is. That's the man. That's why we're sitting here today. He was the head. Charlie ran home entertainment for Big W. The heads of every movie studio, every game producer in Australia, well, global, but the local Australian heads were in Charlie's store. Gosh, it must be about 7 or 8 years ago now, I guess. And they just looked around and they went, well, if Charlie wants to do this, then we're in. And that was pretty cool. It turned out then that the internet, at that stage there was 0 online movies, right? And then that's obviously ramped up, and a bunch of stuff has happened. The first, the big thing is obviously Netflix, and then blockchain. And so we've taken them on this journey, and there's a couple of comments which will explain this fairly well. The first was I was talking to one of the technical guys recently and said, can you believe we've been doing this stuff for 10 years? And they said, actually, you're the guys we want, right? We want people who are going to stick around, they're going to stick with it, and nothing is going to go wrong. And so I guess that would be my advice to everybody in the room, and the difference between speculation and investment, right, is to build something of value, and the thing that is value to them. And the other quote that sort of sums up the journey, right, is for the people who saw my presentation this morning, when we first showed the online thing to Alicia McCauley, who was the head of digital at Fox, she said, Rhett, the P word makes us nervous, but we're coming with you. And that was critical, and they did. And I've thought about it a lot for a couple of reasons, and I think they realised they had to do something. None of us knew what the answer was back then, but they realised that, hey, this crazy guy didn't have chops back then, but now I've got chops and I look even more crazy. You know, this crazy guy might just get it done, you know. And then embarrassingly, we found out about crypto. I've been kind of ignoring blockchain and crypto until January of this year. And when I found it and looked at it, I went, wow, that's exactly what we need. And people get this, and so we pitched it with the addition of the blockchain and the cryptocurrency to all the studios again. And the classic one was a couple of weeks ago. The head of global digital for Paramount was here, and we talked to them for an hour, and at the end of it, she said, this is fantastic. This is exactly what we want. We were trying to work out how we could do things differently. Cryptocurrency was the top of that list. And so it's a combination of going on the journey together and being open about the fact that none of us knew what the answer was, but we were prepared to kind of go down the path together and discover possibilities. And it turned out kind of well, you know, which is good. It doesn't always, trust me, I've got plenty of scars and more failures than successes. But, you know, it's having the few innovators, and this is the other thing that I've been talking about, you know, everyone in the room is an innovator. That is not true in Hollywood. But there are a few people who kind of realise that they've got to do something, and it's about finding those people and going on the journey. Sometimes it's a very long journey, but it has its rewards when you eventually get there.
So Mark, I'll come back to you next. Just wanted to talk about, you know, the supply chain, and one of the things that I know very well through, you know, a lot of the Lakiba clients are, you know, we do a lot of work in retail and FMCG, and we really understand the challenges around, you know, I call it fraud in many different areas around, you know, can range from quality goods right down to really small items. So, you know, what's the real value of blockchain in that space?
It's some of the statistics are just frightening. I said it affects everyone, and the accuracy of these statistics I don't know, but let me just say the vast majority of honey in the world is fake. The vast majority of oil, olive oil, fake. So it's neither extra virgin olive oil from Spain, it's not olive oil, and it's not from Spain. But that's what the can says. You buy it, you pay good money, you don't get what you paid for. Honey, apparently a lot of it is produced in China, transshipped across to Singapore, rebranded, and then sent around the world, and it's just sugar. But it gets worse. Some of the pharmaceuticals are things, heart tablets that are fake. No one probably does an autopsy. Someone's had a bad heart for a few years. All of a sudden they get a bad batch, they drop dead, and everyone says, oh, poor Frankie's heart gave out, you know. Who knows? That's the world we live in. We shouldn't live that way. We should be able to get what we pay for. It's a really simple proposition. So that's the blockchain technology does provide a solution to that. But could I just touch on something like that's there, but why bother to invest in blockchain? So you've got ICOs sitting over here, which that's a form of investment. You've got blockchain sitting over there. I do think they're different because they have different outcomes, different commercial outcomes. A shareholder wants something very different from what a coin holder wants. But let me just put the blockchain in perspective for you from my helicopter view of years of looking at this. Is Bitcoin proves that humans could fly, right? Now we're at the stage where we're at the biplane stage. We don't need to travel along the roads anymore. We don't need to travel along the rivers. We can go from point A to point B. But we can't carry cargo very well yet. We can't carry passengers. That's the realities of where blockchain. So I'm not here to sell snake oil. I'm here to sell a medium-term investment. That's what we do. We're building a business that'll make a lot of money into the future. Classic example, there was a small Queensland airline. All it could do was carry mail bags, but it got into the business early, and that's Qantas, Queensland and Northern Territory Air Service, right? So we're not at the jet age yet, but we're all claiming positions, whether it be in identity or in entertainment or whatever. The time to get involved in these, if you want to make a solid investment, that's blockchain is that. The technology's there, it does work, but look around for returns, look around for projects that make sense. Business hasn't changed. It's still all about good, solid business.
Great. So now, just want to ask each one of you, we'll start from this end and work our way along, is, it's to talk about blockchain for the business is one thing, and talk about, what value that brings is interesting, and for the people in this audience, everybody will understand what you're saying. How do you work in an industry where, most of the people out there don't actually understand blockchain, and how do you market the message to them that, okay, you've got blockchain in your solution, so therefore it's good?
Wow. You're really talking about diffusion of innovation into markets, which I've spent a lot of time studying, because I'm an innovator and a disruptor by nature, and so there's a couple of ways you do it. There's a whole bunch of ways you do it, but really it's about finding the early adopters and the really early adopters and the people who are the innovators. Like I said, this is a room full of innovators. They're rarer out in industry, but you have to find them and nurture them, and they nurture you, and you build momentum. And as you say, it's the early days, but this is how this stuff gets done. So, but it's a very interesting question, because we were deep tech before the blockchain, right? And we'd come to the conclusion that there was not an investor in Australia who could do due diligence on us, and therefore they couldn't invest. And so you go find the ones who can. Right? So we were heading to America, and then this thing came on, and then this is really interesting. It's kind of been this thing where blockchain and blockchain-based currencies, etc., are actually by nature quite complicated. Like anything, they're not as complicated as they first appear to be. But I guess what happens is that for us is that it opens people's minds up to the fact that we're different, that we're going to be different, before they even start talking to us. And so they come with an open frame of mind instead of a closed frame of mind. And a willingness to discover and explore, and that's the other thing that you've got to find. And then if you want to talk about the details of diffusion of innovation into markets, I can talk for hours. We're in the back corner in the room or out in the front, but that's kind of from our point of view. That's the thing.
I guess I'd like to take issue with the premise in the question at some level. So the question was, how do you convince people about blockchains? And I think something that Emma was kind of alluding to that I think is really important, that everybody really seriously grasp, is that a blockchain is a protocol type. It's not a product. It's not a thing that you sell. There's not one version. There are dozens and dozens with different character attributes. And all of them are absolutely useless if you can't identify an adequate use case and a pile of technology you're going to put on top of it and consumers to actually take advantage of it. For me, that's like vital, because for 2 years I was shopped around by a business, say, hey, go sell this blockchain thing to these people, right? And I'm like, this is the most ass-backwards way to try to build a business. Convince people of this thing that they need to buy when they don't know even where to stick it in. Why? Because what you're supposed to do anytime you do product development is thoroughly identify a use case or a business case, understand the commerciality of it, and then eventually you derive at a solution that may or may not involve a distributed ledger of some kind, right? It may involve some kind of cloud service. You might be able to find out that you could use a blockchain type for it, but actually be a pretty shoehorned way of using the tech. And you might have convinced them to buy it, but it would have been just a terrible solution to begin with. So for me, the way that you actually convince people anything about this tech is to identify good use cases or good companies, good pieces of tech that you're convinced actually solve a commercial problem that people would want to buy and use. If it doesn't do those things, you toss up your hands. Now, so I guess that's how I look at things from my point of view. And so when I hear people say like blockchains are going to, rule the world and fix everything and cure hunger and cancer and all this other kind of stuff, I kind of get a little bit nauseous because at the end of the day, when I hear that, I hear someone who's not thought deeply about what the tech does and doesn't do, what it's good for and what it's bad for. So that's what I would say. Use cases like Emma's are great. She's got customers, people she can do stuff with, perfect, right? I've had the chance to do some stuff in banking and supply chain management and payments and all that stuff. You might say everybody loves the idea that crypto is really great for payments. Okay, awesome. Why has Ripple failed? Why is the only thing that's perceptibly valued about Ripple XRP, the currency that they don't really even need on the platform? And the reason is because the business model is flawed and banks don't really want it, and it doesn't solve enough of a problem, right? And that's super important, right? Because it sort of highlights, if you understand how the technology works, highlights that it's just not there, it's just not good enough, not a big enough solution to the problem. So then it forces us to come back to the drawing board and reconsider, like, well, okay, is this tech fit for purpose, or do we need to do something completely different? So.
Yeah, I agree with everything you said. I would say, how would you sell blockchain to people or to the masses? Just don't sell blockchain. Simple as that. You go to people and say, I will solve you this problem. Yep. This is the value proposition of what I'm building. Blockchain is irrelevant. I'm a software developer by background and have been selling software with this and my previous company. I never went to a client before my blockchain startup and said, but this is with like Java. Like nobody cares. Like seriously, none of our clients care if our solution is with blockchain or it doesn't. What our corporate clients care is, oh, we can verify who this person is, but we don't have to work with their competition. It's great, amazing use case. We can get our data from people and figure out more insights about this market. Amazing. We couldn't get data from anywhere before. What our users want is like, we can actually make money and own our data. Oh my God, this is perfect. So for the ones who have onboarded. But nobody really cares if it works with blockchain or not. Currently, I would say the only people who care about blockchain it's not even investors, it's speculators. And that's the only thing that drives this hype is how do we tokenize something even if it's not solving a problem and then speculate on it. So what I would recommend to companies is, if you want to do something valuable, solve a problem first. Don't go and pitch blockchain. So in our first pitch deck, we had blockchain everywhere. Now we don't, because we don't want to dilute or make a false positive, interest from our investors to think, oh, we are onto something, but we are not. And for the investors that are investing, just see what this company is solving, and is the usage of blockchain in this particular product makes a difference. Was this possible 3 years ago? Was this possible 5 years ago? Or it wasn't? When I was sold onto the Bitcoin idea, I know I bought my first Bitcoin around 2012, and I'm born in a country that doesn't exist anymore. It was called Yugoslavia. We had maybe the worst case of hyperinflation in the world. When I was the idea of money that are not governed by a country, a government, was the value proposition. I didn't even know about blockchain back then. Nobody was talking about blockchain 2012. But the idea about something that's so decentralized, it's not governed by anyone, nobody can take it away from you, was amazing. So that's what I think blockchain project should be focused on, something that it's unique and it's unique and it's different from any other value proposition out there. That was not possible without blockchain.
Just to echo that, Douglas Adams once said, technology is what we call things that don't work properly yet. And he went on to say, you don't sell a product and say, this is a kid's toy car with an electric motor inside of it. You forget about the electric motor, you just say this is a kid's car and the electric motor's taken for granted, right? That's what blockchain really should be. It falls into the background. It's just data storage, and all the rest is snake oil. It just is a new way to store data. But there's one interesting feature about that data storage. And that is, if I was to replace the word blockchain with one word, it would be this: collaboration. So the whole idea, when I go and talk to companies and talk to them about why they should be involved in blockchain, it's a simple proposition. If you collaborate with your other people in the supply chain and you put your data into this pool of data, you'll be able to take out more data than you put in. So you might know about the product at the beginning, others can tell you what happened at the end of the supply chain. That's a simple proposition. That makes commercial sense. That's what I go in and sell. I talk about data sharing and improved data.
Great. All right, thanks, guys. So just before we finish up the panel session, does anybody have any question that they want to ask any of the panelists?
It's an excellent question, and it points to one of the issues that we had in the last year. So currently, companies consider their data as a competitive advantage, and they don't want to share the data even with the users. So it's very difficult. So to some extent, privacy laws and data sharing laws in the country says, oh, you have to enable the user to take the data and change it. But what companies are doing is like, of course, we'll come to our office and we'll print it out and we'll send it to you. So that's definitely not useful for the consumers, and it's not facilitating this frictionless exchange. However, as I said, so that was an issue. That was a huge issue. However, that will be properly managed from this year onwards. Starting this year, most of the companies will have to enable API access to the personal information of the user, their customers, and the customer can use this API to extract the data, put it on other people's on other companies' servers, or just store it in their personal exchange. So as I said, things that were not possible. So data exchange was not possible. Data exchange without intermediary was not possible, and that's something that we are facilitating. The blockchain piece of it comes as additional trust layer, so most of the consumers are, you know, like, I'm getting this data from this person or this company that you say is, it will not allow me to exchange this. Why would I give it to you? You know, how are you different? And that key differentiation is the point that we use blockchain. So our key differentiator is we say, we don't manage your data. We enable you to manage it yourself. And I think that value proposition for both the consumer and the company is making them more comfortable with the idea of open data sharing. So yeah.
Any other question? Yep, down the back. I'll come over to you.
Thanks. Yes, again for Emma. So your company could effectively be used for the KYC protocol as well too.
Exactly.
Okay.
So we have a working project for KYC. We're just about to sign a contract with an organization where we will, all of the investors that go through their platform will use our Bron identity to onboard. The good thing is that you can use your Bron identity to onboard one company and another and a third one, and to do that in like a frictionless manner. We have a restriction though. Currently we only work in Australia, and around 95% of our users, of the Bron users, are in Australia. That's intentional for the time being, because we want to be focused and use Australia as a test market before we scale. I think focus is very important for every startup. So that's a limitation that we have at the moment, but you're absolutely right. One of the use cases for a decentralized identity data wallet is a KYC or AML.
Okay, thanks, guys. So special thank you to all the panelists, and they're going to be around for the next break, whenever that is. We've got a few more sessions before that, but thanks, guys, for coming and sharing and being a part of it.
And now I'd like to welcome, to start off our next presentation, Kimon Lykos from Forever Has Fallen. Now, special request. He's asked that you have your mobile phones out and at the ready to use your favourite social media app, it's Twitter, Facebook or Telegram, because he has a special challenge for you. Please welcome Kimon. Yep, that's fine. Ready to go forward, ready to go back.
Wow. Is this on? We on now? Excellent, thanks. Yeah, I'm really glad I haven't got a presentation all about how great blockchain is after that. It's fantastic. Yeah. But also I'm really happy that I've got a presentation that's actually all around a business rationale and a business idea. I've been in business for over 20 years now. I've run companies in Sweden, and I've also run companies here in Australia. I've worked with multinationals, I've worked with startups. So I've got a very good understanding about what it makes, or what it takes to make a great business. So what I've got up here is that the real feature of our business, or the ICO that we're presenting, is that we've got the power to control supply of the tokens, and we've got the capability to supercharge demand. So anyone who knows anything about economics knows that if you get those two things working right, you're looking really good. So the challenge is, as I go through this, I want you to, if I don't fulfill this as a vision, if I can't show you that we've got a great business case, and that if I can't show you that we're worthy of putting money into, flail me alive on any of these social medias. There's all our communities, and you can say all the nasty things that you like. So there's a challenge for you. So open it up and go your hardest. So now it's up to me to make sure that I can prove that we are worthwhile to actually invest in. So the number one thing that I want to say is that I know how you will make money if you give us money. And that is very simple. If anyone understands what it takes, if you buy low and you sell high, that's essentially our value proposition to you. We're creating a global game, and we've got the proven capabilities to create a global game, which is going to bring in millions upon millions of people. So today what I can do is I can sell you our retail game token for a very low retail price. Let's call it maybe 5 cents depending upon the exchange rates. When we generate millions of people, when we've got the game launched, I will have the retail price at a much higher level, maybe something like 50 cents. So basically, your money that goes in will go to create a global game, to create a market for you to be able to sell your tokens to, which is your right. It's your token. You can either keep it as a collectible, you can use it within our game. We've got a brilliant economy. You can even buy a beautiful t-shirt like this. Or you can sell it to other gamers. So the question about why should you buy our game tokens, it's got to do with our entire business model. That's the one thing that I want you to focus on. I'm not here to talk about blockchain. Again, great time. I couldn't have planned that better, actually. But we've got a globally scalable business idea. We've got 3 large and very established markets to create an uncontested market. So we're not making the typical startup mistake of getting into a business area or an industry and trying to take on big guys. We're not trying to be in the next Facebook or Google. We're going to be us. We're going to be creating our own market. And it's an uncontested market. So there's less competition, less risk. Our total available market is 293 million people around the world. Our 3-year goal is 10 million players based upon a historical reference that our team has done. We know how to generate large movements of people who care about a story, who care about a game. The team all have verifiable track records, so I ask you to jump on our website, go through our white paper, check everyone out, link in with them if you like. We've got a globally competitive business model. As I said, we're going into an uncontested market space. And we've got smart economics with the game token allocation and retail pricing, and I'll talk about that a bit later. And the business plan is conservative and understood. I know that I need Ether to be $275 for me to be able to do my business plan. And I know what stages we need liquidity. I know how much we need to spend quarter by quarter.
My name is Carl Axel Mathiasen, founder and CEO of the Forever Social. Stockholm's 8th unicorn. Yeah, that rich famous asshole has been promising digital immortality. In the past 20 hours, I've found my best friend and CTO without her face. Literally, her nose was on the wall next to the bullet holes. My life's work, the Forever engine, has been destroyed. And with it, a billion-dollar fortune. Everyone is pissed. The police, Interpol, and some investors. I got this message 2 hours ago. So here I am, in a secret location, running for my life, framed for murder, fraud, and theft of hundreds of millions of dollars. I'm gonna need your help. Together, we will discover the truth. You'll need to solve challenges, take delivery of special packages, and have some faith. Helping me might make enemies, but hey, I have a fortune in cryptocurrency, so I'll pay you. We can get rich together with Forever Coin. There is one thing I know, what the headlines around the world will now be. They say, if it bleeds, it leads. There is a lot of blood out there. More to come.
In the months leading up to the release of The Dark Knight, more than 10 million people were immersed in a real-world Gotham City. Dozens of websites were found that built a living, breathing city. Players played integrated casual games to unlock pieces of the story. Physical newspapers and special collectibles were distributed. Text messages, voice calls, and puzzles went out to mobile phones, connecting players to the major characters. Users from all over the world created and submitted videos and pictures. Real-world puzzles sent players around the globe. Live events gathered players together, unleashing Gotham City onto real city streets. Video and audio elements introduced players to the fast-paced, emotional aspects of the film. A 360-degree, fully formed immersive reality. An integrated campaign where every element worked together to create a seamless experience.
Okay, so there you had, at the beginning was, of course, our film, our trailer, which explains the story and what's behind it and what transmedia storytelling is all about. The next film that you saw is a film or a capture of a campaign that our team did back in 2008, where over 10 million people were engaged globally in 40 different countries. So if the question is, can we build a game, can we create a story that's going to generate millions of interest? The answer is an emphatic yes, we can. The thing that really impressed us with when we looked into blockchain and we looked into cryptocurrencies was the fact that you could become your own central bank. We thought that was really cool. You might have seen some of the Joker notes in the film, in the case study. Those things were actually printed on $1 US. Those things now you can get on eBay for something like $40. And now I've got to scoot because I've only got 2 minutes left. So I'll go through quickly, skip the market opportunities. We've got a great team and partners. The thing that I really want to impress upon you again is the business model that we've created. We're able to sell you retail tokens for a very, very low price now. If you are truly interested in being part of a billion-dollar company and a journey, then why don't you wait at least 12 months? Normally, I think you guys should have an exit strategy of around 3 years, so 12 months is not much to ask for. And let's see how we go. Let's see if we can create an amazing global game. And we're able to support our global game and our global token because we've only allocated 35% of the total token sale of our actual total supply. So we've got 45% to support our token. So basically the model is that we want people to be able to buy on outlet X, and if the price on outlet X, for example, is 30 cents, we'll make sure that the price in the Forever Has Fallen game is 50 cents. The price that goes up on outlet X to $1 will go to $1.50. In other words, we want all the buying and selling to be here, and we'll support our token. And we're also going to be using US dollars within the game so that we can beat inflation. This entire business model, this entire operation has been put together by some of the finest minds that I've ever come across. We've got some fantastic corporate strategists and economists behind this. We've done modelling on supply and demand. It's something that is going to work because I'm going to put everything that I've got into it. And apart from that, I've got to wait for 2 years until I get my tokens. So you better believe it. I'm going to be working like hell, along with my team, to make sure that this happens. I briefly touched upon the business plan. You can come and talk to me about this, but this just basically gives you the overview of we know how much money we need, we know when we're going to need to spend it, we understand what our liquidity is going to be. It's all in the white paper. So there you go. I hope I didn't get too many nasty remarks or comments on Facebook or Twitter or Telegram or whatever it is. Thank you very much for your time, and I'll be out there, and I'd look forward to answering any question you may have. Thanks a lot, guys.
Thank you, Keeman. And now I'd like to welcome Scott Cross, the Director of Altor Capital, presenting Ned's Coin.
I'm not going to do very well at presenting on that one. All right, that's it. All right, firstly, I'd like to thank everyone else for their time today, taking time out for their already very busy lives to spend 10 minutes to run through Ned's Coin. Ned's Coin, you may have heard of the business behind Ned's Coins. You might have heard of the bookmaker called Ned's. You might have seen it on the TV or on Foxtel, the Ned's It's Time to Bet. What I suppose we're offering different to some of the other opportunities you may see out here at the moment is Ned's Coin has a real business behind it. It is not a startup. It has over 100 employees. In its first 3 months of operation, Ned's turned over $233 million. It's on trajectory at the moment to turn over $1 billion in its first year. So given the fact that Ned's started at the Spring Carnival, i.e. Melbourne Cup last year, to date has done a turnover of over $500 million, which is fairly impressive from a standing start. And you would have seen other gambling companies out there with utility tokens and various other tokens around there. I suppose the main difference between the Ned's Coin and other tokens you may see out there is, unlike other bookmakers, the Ned's Coin holders will get a quarterly distribution paid to them in real dollars every quarter based on the global turnover of Ned's. So we always commonly get the question, you know, when's it going to hit an exchange? When am I going to make any money? You know, what's going to be the first uplift? From the token generation event, 3 months past that, you will get your first distribution based on the global turnover of the Ned's book. Just your disclaimer there. So as I said, where we differ apart from a traditional sort of gambling token is, as I said, not a startup, well-established business, legislated business. It's a licensed business out of the NTRC. We will not operate in any grey markets. Any global expansion that Ned's do will be in a licensed jurisdicted market. 0.25% of the global turnover of the Ned's International Global Sportsbook will be paid back to eligible shareholders or eligible token holders every quarter. On top of the, I suppose the validity of paying a quarterly distribution is that it will have a second tier of availability to it, and that it will be a utility. The Ned's Coin can be wagered on the platform in traditional bookmaking as well. Just to give you a bit of an update on the global landscape, I don't want to spend a lot of time on it, but as everyone knows, the global landscape in the gambling market is significant. If we look over in 2019, we're looking at almost $500 billion in turnover. Of that, horse racing and sports bookmaking make up approximately 37% of the global industry worldwide. So we're not talking about a small industry, and there's significant room for growth and significant, I suppose, room for a bookmaker such as Ned to take a large chunk out of that share. So you may ask the question, who are Neds? They're an industry-leading management, and I will go through the management team a little later. I mentioned earlier it is already operational. Turnover, as I said, first 3 months was $233 million, on track to turn over $1 billion in the first 12 months. And a key point here, as I mentioned, it's a licensed bookmaker. Currently in Australia, it's licensed out of the NTRC, or the Northern Territory Racing Commission. The next expansion steps will be the UK, Latin America, and North Africa, and these will also be licensed jurisdictions. We will not be operating in any grey markets. 125 plus employees. The global rollout is already planned, and I'll run through that a little later. And they've already won various awards. So Ned's achievements to date. Current bookmaking on track for $2.5 billion by 2019. International expansion, as I said, is via the UK, Europe, and Africa. The global sportsbook turnover of $88 billion by 2022. Now that's excluding the potential of the USA market. I'm not going to spend a lot of time on it at the moment. However, you can come up afterwards and have a chat. There's various court cases going on at the moment that may open up the US to bookmaking. And as I said, all global wagering will be via licensed jurisdictions. And then it comes to the executive team. I'm not going to run through all these people individually, but the gentleman up on the far right, or sorry, your far left, is Dean Shannon. So Dean has a long and successful history in the bookmaking industry. He originally founded bookmaker.com.au, sold that to what you would all know as Ladbrokes. So Dean was the CEO of Ladbrokes for the last 5 years and grew it to what is one of the prominent bookmakers in the country. Having exited Ladbrokes, Dean, of course, then started Ned's, and as I've said, from a standing start to turn over $233 million in your first quarter is quite impressive. So what I want to look at now is the opportunity that I feel Nedcoins presents to everyone. So we're currently doing a pre-sale to eligible people. We will be taking BTC, Ether, and fiat currency. This will be offered at a 20% discount to the crowd sale. As I said, the sale allocation, the pre-sale, we're raising approximately $20 million in the pre-sale. The crowd will be around $34 million. We're already at bids of around $6.5 million, so far it has been very, very easy to move. There's been a lot of demand for it. Then when we come down to the allocation of the token, it's split approximately 50-50 between the public token and the tokens that are held by the company to further, I suppose, allow for the liquidity in the token. And people always say to me, oh, liquidity is going to be an issue. What if the gaming doesn't take up globally? By the premise that we're allowing eligible token holders quarterly distributions, we will see, like we see in normally traded commodities, that they have come and ex-dividend prices. Every quarter there'll be natural buying into the token because people want to hold the token on the date they're eligible to receive a distribution. That, coupled with the fact that all tokens that are that are lost on the platform via traditional gambling, 50% of those tokens will be burnt. There'll be a natural increase in the demand for the token. Oh, sorry. Just to jump back, the allocation of the funds raised, around half of it's going to marketing, and the rest of it is split 25% to development and operations. Oh, sorry, I've missed a slide. Oh, no. So I just want to spend a little time on this slide. And this, I suppose, really comes down to the appeal of having a global bookmaker that's growing at the rate at which Ned's is growing. And that's purely because I've just done a fairly simple calculation here on the four-year yield based on a $100,000 investment into the pre-sale. And you can see in year one, in 2019, currently on track to hit that turnover rate. The yield for someone who held $100,000 worth of investment in the pre-sale, the yield will be about $6,458 and a relative yield of 6.5%, which is quite appealing given the relative low interest rate environment we're at the moment. And you can read the rest of them as it goes on. What we're saying here is there's going to be essentially two or three holders of this coin. One, there's going to be the investor who holds the token in order to get the quarterly yield. There's going to be speculators like there are any other token. Once it's on an exchange, there's going to be people that are going to speculate the coin will go up and or down. And third, there's going to be the people who buy the token via an exchange to wager that token on the platform. There is our contact details. A lot more information in the white paper can be seen at nedscoin.io. If anyone has any other questions with regards of, this looks like a security, it's paying a quarterly distribution, how are you running this process? We're available at the stall after this. But apart from that, thank you very much and appreciate your time.
Thank you, Scott. And now I'd like to welcome Alan Endres from Zookaz to the stage.
Good afternoon, ladies and gentlemen. My name's Alan, and I'm the founder of Zookaz and Zoocoins. I just wanted to having heard a lot of the speakers earlier, I just thought I might start by running a story and share that story with you as to how you can take 18 years of hard work and a bit of luck and create an overnight success. And that's the starting point for me. We'd successfully built since 2000 an online payment system, a gateway that allows our merchants in e-commerce to settle transactions, as you see with PayPal or a Western Union. The inherent problems we encountered over that journey have been, not to say the least, but numerous. From AML, KYC, and the way in which you have hackers, fraud, reversals, chargebacks, and the list goes on and on. During the course of that journey, the last couple of years, there's been some momentous change in the industry sector for us as a business. And there were three clearly identifiable issues that we encountered. And the first issue being the merchant-consumer relationship. How do we create value? How do we create extended revenues from the loyalty between the merchants on our database and the customers in relation to those merchant transactions? The second was working our way through the hacking problems and the theft that had occurred on sensitive data that you maintain. And that led into the third, and the third being the way in which we can streamline global transactions in an efficient, instantaneous way of real value without the inherent problems, and that led us to the cryptocurrency. Now, ladies and gentlemen, I'd like you to watch this video first.
Advertising is working. Imagine customers coming directly to your door. Zookaz can do just that. And it's as simple as downloading the free Zookaz Biz app, sign up, and start dropping your real cash vouchers. Zookaz works through augmented reality. So you can drop a voucher in a nearby park, out the front of your business, at a local cinema or train station, wherever you want. When a customer has their app open, they can see Zookaz vouchers in their area. They can go out to hunt and collect them. Then they bring your vouchers back to your business, store, or restaurant. Zookaz allows you to access your customers directly. No middleman. No more wondering if your advertising is working. You'll know it's working. And if the vouchers aren't redeemed, it doesn't cost you a cent. Zookaz, bringing you the next level of advertising.
So ladies and gentlemen, being an old school accountant, and don't hold that against me, I do search for value and I do search for returns. My son in the younger generation, on the other hand, search for excitement and the real buzz that can come with that if you marry that in. Literally, I was watching one night late in our offices, 200 odd kids running down our street in Albury Wodonga, small town between Melbourne and Sydney, which were chasing Pokemon Go. That was the commercialisation breakthrough. That meant that we could avoid all advertising mediums of middlemen. We can remove Facebook, remove Google, and all of the current usages of advertising we see today inherent over the last 15 odd years, including mainstream media, TV and advertising. What we're doing is ploughing the capacity of the merchant to put his money directly to the consumer anywhere in the world, 24 hours, 7 days a week. Example, rather than paying Facebook $1,000 in terms of the ads, that 1,000 can be brought into 10 $100 vouchers and literally dropped anywhere on the planet, of which the hunters can go out hunting and collecting those vouchers. Now, the exciting thing about that is, I'm going to use some big numbers because technology is starting to catch up with the vision that we'd started in 2000, and that's the truth. The reality is there's $500 billion spent in 2016 between Facebook, Google, Instagram, and the major companies in this sector. If we can capture any fraction of that, or all of that, that's the vision, $450 billion would plough its way back to consumers. That's you and everybody in this room and others. We take a 10% fee from the merchant only on redemption. If that voucher is not successfully redeemed, there is no cost to the merchant. It's a whole new industry cycle in terms of value proposition. There is also the trading excitement. By the hunting and collecting that you've seen, people can now go and really collect real value dollar vouchers. By that means, if there's a $500 one out the front here for a hotel or a pub, I can split that voucher into multiple parts. I can retain some for redemption, or alternatively, ladies and gentlemen, I can sell that in our unique trading platform. That's never been done before. We take a 10% fee only on success of the sale, so there's no hurt to the consumer that has now collected that voucher. As you see there, in terms of that program, we then needed to solve the hacking problem. Well, this is where luck comes in, ladies and gentlemen, and sometimes going to a pub and having a drink can work in your favour. In Melbourne, one night, I met a fellow called Andrew Tune, who is a genius, software developer, that created SplitLock. We bought the company. Listening to him was boring as batshit. I have no idea in terms of what he was saying, other than I thought this is a solution to solve data protection. We don't protect our data, ladies and gentlemen. We make it fragile. We split the data into packets, and we leave data in different positions around the world, whether it's through Amazon in South Korea, Ireland, or Singapore. And I'd invite anybody to come and hack our data and have a look at the Egyptian hieroglyphics that's sitting in the back end. Not even my software coders can access their own code data in terms of the storage. Every 100 lines is split, crypted, and packaged around the world. That's never been done before. Now, I'm not the genius here, but I can assure you that hiding in Little Albury, it turned out that we do have a genius, a young fellow called Robert Novak, who made SplitLock what it is today for our own protection of data, whether it's ID, passports, anything you can imagine that you're worried about. And he came to me and he said, Alan, I love the Zookaz. We need to centralise your payment processing concept. Let's use crypto. Well, little did I know that he could take the encryption technology, modify blockchain, and achieve three amazing outcomes. One, no miners, no fees and transactions, and tens of thousands of transactions per second. Now, Bitcoin does 7 to 15. Someone mentioned Ripple earlier, 1,500 if you're lucky, of no value proposition. The third crucial part, because that gives us a capacity now, where with our crypto coin, which is the Zoo coin, that gave us the firepower to say we can use our ecosystem of millions of customers and merchants to transact freely at no cost cryptos for the first time in a true decentralized form within, and to our surprise, a peer-to-peer trading platform, which means you take the middlemen out of the trading platform as well. Foreign exchange issues go away. Transaction fees go away. You can move that crypto to buy a hamburger or a coffee and enjoy the collection as well through the Zookaz app, downloading those anywhere in the world for hunting and collecting. Now, ladies and gentlemen, we jumped the gun a little bit early in terms of our processes of the cryptos and the funds we're raising. We've closed 26.25 million as of today. We have 10 million coins, pricing at $5 US. That'll be the close completely of what we're chasing in terms of our globalisation. We have no shortage of merchants. In 8 weeks, we go live with the West Sydney Tigers Football Club. There'll be 18,000 supporters hunting and collecting on the game day, vouchers that you wouldn't believe, including a $10,000 one where people will get direct communication, FaceTime, with a player during halftime after they've collected the 10,000. The augmented reality concept is unbelievable. Thank God that there's a second generation that you'll be in safe hands with. Not that I'm going anywhere shortly, I can assure you, but that generation is what's the driver, the infusion into our business after all these years. And they are absolutely amazing, those young kids, and how they not only build the software and codes, but want to deliver a globalised true platform for merchants to break the back of the middlemen on all scales. So I'll just leave you. This was done today at our local Hume Weir. And those augmented reality vouchers can be anything. They can be avatars. You can actually click into that voucher and go into an augmented room and start trading the coins amongst yourselves in your own areas, if you like, either privately or publicly, rather than a boring old bid and sale price, which is used to in my day, and also you see through Coinbase and other of those exchanges. That's never happened, and the interaction between people will certainly give a run for the money that we've all been used to in facing and text time. So, I haven't much more to say, but I tell you, goddamn, we're excited, and this is going to be a revolution that's coming. There are 4 things you can be part of this, not just the coins. 1, if you're a merchant, come along, bring your database. You'll make 30% with us of every dollar in relation to that transaction. 2, 20% of every dollar we make globally goes into the coin in the smart contract. So there is an underlying floor of real money. On the $500 billion exercise, that could be very well $10 billion a year into the coin. That's never happened. The second, you simply want to lob the vouchers, drop them around as a merchant. The system's available freely to merchants and hunters as well. And the third, just go out and hunt and collect. Let's light up this city. See the vouchers, collect them, and trade them amongst yourselves or go and use them. Thank you.
Thank you, Alan. And now I'd like to welcome Amir Farhand, CEO and founder of Saw Earth, to the stage. Off you do.
Oh, it's got to connect to there. G'day everyone, how you going? Look, I know it's the last one of the day. Well, is it the last one of the day? It is the last one? Okay, well there you go, okay. So look, hopefully it's a case of save best for last, okay? So I'm just going to go run through it. It's going to be really quick. I'll try to keep it below 10 minutes and you can just run through it. My name's Amir and I'm the CEO and founder of SAW.
Initially developed for military applications, drone technology has found its way into the mainstream and is now entering a period of massive growth. Today, drones can be found in all types of applications and uses, from farming and agriculture, mining, real estate, logistics, through to news and media. By 2020, there is expected to be 22 million drones, a market projected to be worth a staggering $127 billion. The democratization of drone technology is now well and truly underway. However, with this democratization comes several key issues which need to be solved relating to scalability, sharing, authenticity, and accountability. And that's where SOAR comes in, the world's first decentralized global platform. Using the power of blockchain technology, SOAR seeks to democratize the drone industry. This permissionless and autonomous mapping network will allow any drone operator to contribute and share their data on a global scale. But this isn't where it ends, not by a long shot. SOAR will in due course create a dynamic database with an unprecedented validity, all delivered at a staggering level of detail. the world's first super map protocol. Soar. Think of the possibilities.
So look, I just wanted to just walk around a bit because I'm actually falling asleep right now, right? So just to follow on from that presentation, I just wanted to talk a little bit about where the technology came from. So we've been mucking around with this tech for a little while now. It started in 2015. US military invited us to make a solution for them, and this was an effectively advanced situational awareness tool. And it was really, they wanted a decentralized solution which was highly innovative in a tactical response environment. In 2017, we finally got the kickstart and we got the acceptance. And it allowed us to be able to do funky stuff like this, right? Now, the US military doesn't like the word blockchain. They don't like the word decentralized, really, even, okay? Because effectively to them, everything is security and protocol. And we look at our technology in effectively two stages. The first stage of SOAR is the democratized geospatial marketplace, which is highly run on content from drones and so forth. And this is a marketplace which is actually very similar to ones that you already know. So Alibaba, eBay, I stock photos, okay? But what's actually going on here is there's actually a prolonged stage 2, which we're actually building behind the scenes as well. And this stage 2 where it gets really, really exciting to us. And that's what's happening is that through collaboration, and I remember Mark used the word collaboration quite efficiently in his presentation, is that we're slowly seeding the marketplace and the first crowdsourced supermap of the world, all based on blockchain technology. Now, 3 indicative factors here is we don't own any of the data, we're not going to share any of the data, and we don't store any of the data. It's all done on hexadecimal metadata. So how does it work? So with the US military, we came up with this innovative solution, which is called the quad tree. And I haven't even been able to allow to use the word quad tree until 2 weeks ago. And what this does is, it's a grid that effectively divides the entire world into small grids, if you like, or more small squares. Now, these small squares could be huge. I mean, the top one could be, say, several hundred kilometers long. And there's ones that could be several centimeters wide and long, okay? And that's pretty innovative, because what it actually allows us to do, it allows us to be able to build what we like to call Sky Bounty. Now, I actually wanted to call our tokens Skynet, right? But obviously, because of the bad situation there, we just decided with SkyMap. I think it was actually trademarked as well. So let's look at that, right? We've got an economic model that divides that grid up into supply and demand. And that supply and demand is effectively represented with this schematic diagram. So this is a drone image that's taken in the Caribbean, and it's very, very high resolution. I think this was done at 2 centimeters. And at this 2 centimeter grid, you can see that the particular grid that overlaying that person's house is actually worth more in a particular time because of, say, for example, the guy wants to sell his house. He wants to take some fantastic images. So how do we know that works? How we know that works is we've come up with an algorithm, and this is all based on the quad tree. And effectively what we've done is we've come up with a value proposition in the map index of those grids, which I mentioned before, the size of the grid, and more importantly, the resolution. But this is really good, because what it allows us to do is some really, really funky things with that data. So we're not just limited to drone data, we're actually limited to all types of mapping data. 3D data, could be some satellite imagery, could be some aerial imagery. So let's look at some of the user cases. Someone's getting married in a vineyard, drone operator takes a fantastic romantic image of them. What if you could use the same data to do this? Now, effectively, the user case of the economic model here is that that particular grid where that image was taken has got an inherent value on it. And we're using that purposefully to build our supermap. And this supermap of ours is effectively the structure of it has already been created. It took us 2 years to build it. And this is based on the blockchain. It's a highly dynamic temporal database, right? Okay, of crowdsourced imagery. And this crowdsourced imagery, like I said, could be from multiple uses. It could be still imagery, or it could be videos. Now, one of the most important factors, I guess, with any business is how much money you're going to make. The revenue is so important. We're going to take a clip off every process or any transaction that's done on our website. Another way we're going to do it is via a product differentiation model. So that's an example of what you see on Google Imagery. And some of the visceral responses of drone imagery is actually quite fantastic, because you can see that this drone imagery is at high definition. And currently, mapping engines actually can't show that level of detail. So if you go to Google Maps, the best you'll probably be able to get is level 23. This SOAR imagery or drone imagery is actually around about, I think it's about level 28 or 30. Integrated services model. We've actually opened up our API to other service providers that are better than us at articulating and processing imagery. For example, the health of rice paddies in the Philippines, or counting cars automatically, or even determining the size of, trees, or counting the trees for a local council for carbon emission credits and so forth. So this is quite important as well, because I personally believe this is going to be the biggest growth sector in our business model, and it's the content marketing model. And the content marketing model is, because everything is pegged to a location, this gives us the ability to be able to catalog, distribute, search, do all this fantastic stuff, which the blockchain can do, quicker and cheaper. And this is going to have significant implications on content marketing. For example, where was this surfing video taken? Okay, Southwest Tasmania, according to YouTube. Where exactly, right? And you can see that fantastic whale imagery. Okay, it was taken at some Newport Beach, okay? Which part of Newport Beach and so forth. So these are all very, very important factors. Just to sum up, just really quickly, you can go to our website and check this out for yourselves, but we're releasing our white paper later this week, which is pretty good timing for this event, and our pre-sale starts in about 2 weeks. Some of the guys are actually here that are leading our management, the fund managers from LCV, and the public sale, it's due to start in about a month and a half over in May. And we're aiming to get this the token generation event completed by June. So look, here's the website. You can come and approach me after the presentation as well. Love to answer any of your questions you can have. You can visit our Telegram channel, which we opened up the other day as well, and you can download the white paper on our website in the next couple of days as well. Thank you so much, guys.
And now for our final keynote of this event, I would like to welcome Henrik Andersson, CIO of Apollo Capital, who will be giving us a keynote on crypto asset valuations.
Thank you, Alex, and thank you all for staying to the last presentation today. So we've been here all day hearing about ICOs and crypto, and I thought this would be a good opportunity to talk about how did we get here. A lot of people entered the space, I think, last year during 2017. Obviously, we had a big hype around ICOs, and we've heard a lot of ICOs today. But I just wanted to give you a bit of background of how did we get here with 1,500 different crypto assets that we have today, and then trying to make a stab at how do we value these things. So it all started with Bitcoin, as you know. Satoshi released the Bitcoin white paper on October 31st, 2008, but it did not come out of nowhere. So I think this is an important point. It was based on decades of research beforehand. So Ralph Merkle invented the Merkle trees in the 80s. That's the data structure used in Bitcoin. Distributed timestamps was developed in the 90s. That's what the miners use to determine what transactions are coming first in the blockchain. And in the 90s, there were a lot of excitement around digital cash. So we had people like David Chaum developing DigiCash, for example. We had Liberty Dollar, backed by gold and silver. It was shut down by the FBI. All these systems were centralized, and the libertarians at the time, people like Nick Szabo, they wanted to create something that was decentralized, not controlled by a single entity. In '98, Nick Szabo released BitGold, similar to Bitcoin. They die had his B-Money, is referenced in Satoshi's white paper. We had people like Adam Back, still active in the Bitcoin core community, developing Hashcash that is used for proof of work in Bitcoin. Bitcoin's innovation was based on all these technologies, and I think the genius of Satoshi was to bring these technologies together and create a system where the incentives are perfectly aligned between the different actors in the ecosystem to grow something from nothing to $150 billion where it is today. And there was a true breakthrough in computer science. Before Bitcoin, we couldn't take ownership of a digital asset, and that is the fundamental breakthrough in Bitcoin. And for the first time in humanity, code became money with Bitcoin, and code is just another form of free speech, if you like, and free speech is a fundamental human right. So code becomes speech, becomes money. We can put equal signs between all those things. There are three, I think, parts of blockchain that really puts it apart from other technologies, and that's the permissionless nature of blockchain. So anyone can join these networks, anyone can mine, anyone can transfer value peer-to-peer without a trusted third party. The other part is the censorship resistant. So there are no accounts that can be shut down. Everything is created in a decentralized way. And the third thing is the trust minimizing part of blockchain. We don't have to trust a third party. We can transfer value to anyone in the world, and we don't have to know that person. We don't have to trust that person, but we know that the transaction will happen as it is created. When we look at crypto assets at Apollo Capital, the crypto fund that I co-founded, we look at this kind of characteristics for projects that we invest in. Do they need permissionless? Do they need censorship-resistant characteristics or trust-minimizing characteristics? But I think an important point is there are trade-offs with this technology. So blockchain is much slower and costlier than doing something in a centralized way on a central server. And I think that's partly misunderstood. So doing something that is recorded on thousands of computers in a global network costs something. And the price for that is efficiency and the speed of the network. But in return, we get something that we think are much more valuable, and that is the security and the social scalability. So the trade-off, you can say, is between computational scalability and social scalability. All of a sudden, we can trade and do business with anyone in the world, and we don't have to trust a third party. The next big breakthrough was Ethereum. It was announced by Vitalik Buterin in 2013. He was 19 years old at the time. It was launched in 2015, and it quickly attracted a lot of money. So the DAO raised $150 million in 2016 when the network was only a year old. And what Ethereum does is create a system on a global world computer for smart contracts. So smart contracts is snippets of code that are executed on a distributed computer in the Ethereum virtual machine. This quote from Nick Szabo describes a potential early application of smart contracts. Financial derivatives are very well defined contracts, and there's a potential use case for smart contracts, and has the potential to disintermediate big financial organizations. Nick Szabo, by the way, he invented the term smart contract 25 years ago, long before Bitcoin and Ethereum. And Ethereum also led to an explosion of tokens. I mentioned earlier there are 1,500 or maybe even 2,000 different crypto assets traded today, and that is because the innovation that are based on Ethereum. So in the early days, we had blockchain that was based on Bitcoin's code, but on a new chain. That's something like Litecoin, for example. So you needed that new infrastructure of miners and full nodes for these kind of new crypto assets. Then we have other type of crypto assets as well. We have those with a completely new code base, like Ethereum, for example. And I think the final new kind of blockchains are based on a forked chain and a forked code as well. So example of that is Bitcoin Cash, when the complete history is forked into a new crypto assets. But what Ethereum created was a standard to create a new token called ERC20, and that led to an explosion of the number of tokens. So today we have hundreds of tokens based on top of Ethereum, for example. So it makes it really easy. You can create a new token in minutes, and we have things like basic attention token, Civic, we have Omisigo, for example, on top of Ethereum. Those are all ERC20 tokens created on top of another network. So it uses the security model of Ethereum. You no longer had to create a new crypto assets from scratch. And today we have a diversity of crypto assets. We have things like commodity-like crypto assets. That's Bitcoin. We have things like medium and exchange. That's Litecoin and Nano, for example. We have utility tokens, Binance coins, basic attention token, Filecoin, for example. We have tokenized securities. And that's a big potential market for crypto. Maybe one day we will trade today liquid instruments like equities, like commodities, like bonds, etc. On these tokens, and also illiquid instruments like real estate, like VC funds, for example, can be tokenized one day. And the SEC chairman recently said that all ICOs are securities. So maybe there are a lot of securities out there. Maybe Ripple is a security as well. They have a for-profit organization, enterprise behind it. We don't know right now, but hopefully we will get more regulatory certainty later this year what constitutes a security. But when we talk about tokenized securities, we can use a traditional DCF cash flow model to value these things. And then the final, I think, kind of crypto asset is the basically the digital collectibles like CryptoKitties, for example. And actually, Andreessen Horowitz, one of the biggest VC firms in the world, recently bought out the team behind CryptoKitties for $12 million. So how do we value these things? Well, if you think Bitcoin is a type of digital gold, we know how big the gold market is. So the value of all gold is between $8 and $10 trillion. We know how many Bitcoins there will ever be, 21 million. We could argue that Bitcoin is better than gold. You can transfer it to anyone in the world instantly for free. It cannot be taken away from you, and it's scarce like gold. If Bitcoin were to reach 10% of the value of gold, one Bitcoin would be worth some $50,000. So that's a simple way of thinking about a digital commodity. Maybe that's one of the properties of Bitcoin, for example. Another way to look at it is what we call the NVT ratio. It's been called the PE ratio for crypto assets. So what is the NVT ratio? NVT stands for network value, so the price of the coin times the number of coins outstanding. And the T is the transaction value, so the on-chain transactions on that blockchain in US dollar for the coin. So network value divided by the on-chain transactions that give you a relationship between the value of the network and the actual usage of the network. This chart here represents Bitcoin. The red line is the NVT ratio the last few months for Bitcoin. We can see it dip down in August of last year, and another bottom in November, I think, of 2017. Both times was before big run-ups in the price of Bitcoin. However, I think it might make more sense to look at these within a certain sector or vertical. Here we are looking at the MVT ratio for the vertical that we can call currencies, Bitcoin Cash compared to Litecoin and Bitcoin. Bitcoin Cash here had a very high NVT ratio earlier this year, so you could argue maybe Bitcoin Cash was overvalued earlier in the year. That would be the conclusion from something like this. We have more general models as well, and I think there are a lot of unanswered questions when it comes to this kind of analysis still. So these are some of the questions that we can ask ourselves. In Bitcoin, for example, we don't know what is the actual transaction and what is the change transaction. We can make good estimates of that, but that's all we can do. What kind of inflation adjustments should we make to these coins? We know the issuance, but should we use the 5-year out or the 10-year out? If this kind of analysis becomes very popular, we will probably see fake volume to try to fake the NVT ratio. I wouldn't be surprised. Privacy coins is another problem as well. Those uses shielded transactions, and we cannot calculate the NVT ratio because we don't know the on-chain transaction volumes for those coins. Then we have off-chain transactions like Lightning Network for Bitcoin, Plasma for Ethereum. What does that mean for the NVT ratio if transactions move to another layer? And then the question is, of course, the on-chain transactions. What is speculation versus real usage? So maybe 1/3 of the transactions for some coins are between exchanges. Should we calculate those or not when we calculate the NVT ratio? So a lot of unanswered questions still doing this kind of analysis. A more general network would be to use something like the equation of exchange. That is M times V equals P times Q. That is basically you take the size of the asset base times the velocity equals the price times the quantity. For an economy like Australia, P times Q would be the GDP. The GDP for Australia is around $1.7 trillion. The M1 monetary base for Australia is $350 billion, and the velocity for M1 is around 5 times. So this is a macroeconomic equation, and we can try to use that for utility and currency, cryptocurrencies as well. And in that case, we would solve for M, which is the monetary base for the crypto assets. So the monetary base would be the price of the cryptocurrency times the number of tokens. And P times Q would be the amount we would like to transfer on that blockchain. And let's do an example. So I take the example of a very simple utility token. There are some very popular utility tokens like Binance Coin and Qcoin that is used to pay fees for in the exchanges. So that's what we call an exchange token. We have to make a number of assumptions. In this example, we have 100 million tokens. We know the global exchange volume at $5.5 trillion. We have assumed that the average commission size is 20 basis points, and using the token, you can get a 50% discount. That means the addressable market for a token like this is $5.5 billion. We have to make an assumption about the market share. Let's say 10% in 5 years, a velocity of 10, and we have to discount this. I've used a high discount rate here of 40%. So if we plug into the value of exchange equation, remember we are solving for M. The 10 basis points commission rate equals a P times Q of 550 million. With a velocity of 10, that means we need to transact $55 million on this blockchain. 100 million tokens, that's 55 cents per token. And then we have to discount that back to today's value, which would equal 10 cents per token. So this is the kind of framework to think about the value of some utility tokens. At least it's one suggestion. Of course, there are many unknown. Velocity is a big one. If we assume that people buy the token for speculation, those tokens might not be moved, and the velocity of those tokens are basically zero, which would reduce the overall velocity. So if you have 50% hodlers, for example, that could reduce the velocity in this example to 5, and the token value would thus increase to 20 cents per token. So this is still very early days in type of crypto asset valuation, but with the value of exchange equation, velocity is a bad thing, and hodlers are a good thing. That's still very debatable. You can argue that blockchains want to encourage velocity because it increases the utility of the blockchain. So velocity in that sense would be a good thing. So I think this illustrates that it's still very early days in terms of in doing fundamental analysis of crypto assets. And I think I'll end with a quote from Chris Bruninsky, who has done a lot of research in this area. It's basically very early days, and we are still looking for the best methods. But this is a new area, and we probably can't use the old kind of valuation frameworks. We need to develop new frameworks for crypto assets, and we are doing some interesting work in that area. So thank you for today.
Thank you very much, Henrik. And that concludes Wholesale Investors Crypto and Blockchain Convention. If any of the companies that are presented today are of interest, please meet them at their trade stands, request interest via the link that was sent to your phone, your SMS or email, or use our event app. I'd now like to welcome you to join us for networking and light refreshments at the end. Thank you all for coming.